That being said, ladies and gentlemen, we have the last two segments of the day. Before we begin with our next panel, request you all to again, please share all your key takeaways from this event on your social media handles, especially on your LinkedIn accounts, with the hashtag FinTech Festival India. Do not forget to tag us at FinTech Festival India, and please share your key takeaways to the wider audience. That being said, it's now time to march forward to next panel discussion that focuses on leveraging artificial intelligence to revolutionize underwriting and risk assessment, the opportunities and risk for improved business results. Well, I know you all have probably heard by now that AI and cloud-based technologies are the future of insurance. Customers want to be protected by their insurance, and they want interactions with their insurance provider to be as seamless as possible. Well, the next panel up will be answering a lot of questions that you all have. That are, what are the challenges that do businesses face when implementing AI in these areas? And how does AI help improve the accuracy, speed, and efficiency of the underwriting process? Well, all those questions are soon going to be answered as we have a stellar lineup of speakers for this next panel discussion. And to spearhead this conversation, may I please invite on stage Yashraj Tyagi, Chief Technology Officer and Chief Business Officer, Cache. A warm welcome to you, sir. Next speaker we have is Mr. Kezat Hiramanik, Chief Operating Officer, Edelweiss Tokyo Life Insurance. May I please invite Srinidhi Shama Rao, Chief Strategy Officer, Aegon Life Insurance. Ladies and gentlemen, can we please welcome them with a round of applause? May I please invite on stage Amrita Sarma, Chief Risk Officer, Axio. Warm welcome. And we have Mr. Madan R.A., Vice President, Credit Risk Data Science from American Express, joining us as well. Ladies and gentlemen, can we please begin with this panel discussion with a round of applause? And now I hand over this session to Mr. Yashraj Tyagi to please take it forward. Thank you.
Hello. Thanks so much for the generous introduction, and good evening, everybody. Very happy to be here again after a year. I was at a similar discussion last year, the same event in Delhi. So we've again got a cracker of a panel here, as I can see. And just by way of introduction, I am Yashraj Tyagi. I head tech and business at Kashi. We are a new age credit-led financial wellness platform in the domains of credit, investments, and insurance. And this topic is personally very relevant to me, forms a large part of what I personally do, what we do as a company, and would be very relevant to the stellar folks present at the panel here. Just speaking about, while we have folks from credit and insurance, and since my personal journey has been a lot around credit, if you think about it, according to a FICCI report of from a year and a half ago, only 10% of India actually has a credit score to start with, and only 10% of those who have a score that is good enough for money to be lent by a bank. So we're talking about the formal financial institutions in the country probably servicing only 1 to 2% of the country's population. And India is a massively credit-starved country, and this is the reason for credit under-penetration. So what do you do about it? But then again, the fastest rates of smartphone penetration in India, the fastest rates of internet penetration in India pose us with a unique opportunity to actually solve this problem by using and leveraging the vast amounts of unstructured data being generated at a consumer level every single day. And that's what we do as a company. We work on using alternate behavioral data of consumers at scale to create alternative proprietary machine learning models that can be then used to give credit to the underserved and underbanked. And we've been doing that for the last 5 to 6 years with a lot of success. And I'm sure that all my fellow panelists have a lot of similar success stories too. So since the panel has already been introduced, I wouldn't ask them to do that again, but we'll dive right in. And Madan, I'll probably first start from you. I'll first directly go to the big elephant in the room when it comes to machine learning, which is the explainability, right? Explainability of AI has been a big discussion topic by the proponent and opponents of applications of AI in commercial settings. But just looking at the kind of stakes we have today as individual businesses, right? We could just can't afford to have things deployed in production, which are pure black boxes, so to say, right? There needs to be some bit of knowing what is actually happening under the hood. So from your perspective, from the perspective of Amex as an enterprise, right? How do you really tackle this problem of for actually having cutting edge models deploy out there, but also being able to explain what's really happening out there?
Yeah, thank you, Asharaj. So yeah, as you rightly put it, it's the elephant in the room. So as in you can't deny it, you can't live without it. So I think in American Express, at least we see is model explainability to many stakeholders, right? First is explaining the model to ourselves, being able to communicate the model output to customers, like being able to take decisions without harming them due to that black box risk that you mentioned. While especially, let's say, if you go into even more nuanced algorithms within neural networks, which could just go into multiple layers without being able to explain itself. As in, we have pretty much a dedicated AI governance team whose day job is just to explain things that others, fancy things that others come up with, right? And then they give us a lot of hard time because when we just build something that is not explainable, so they help make us accountable. So I think the common expectation of a model explainability in the past has been the last step of let's say if you're doing a predictive model and it comes out with a probability, the only thing that was always expected is why does it say 20% probability of default or why does it say 2% probability of default? But now we are thinking at even more deeper layers, right from when you design a new data science variable, like is it intuitive enough to your relationship to your objective function? Do you really want to use this? Because in the past it could have been just about whether it is predictive to your objective function, and if it's thus rank order, you go ahead and implement it. But now we want to also put in the layer of interpretability and bring in that right from feature selection to hyperparameter tuning. So every single step of an AI model that you would think of has interpretability, sort of the flavors of interpretability written into it today. And I'll also talk about something that when we eventually have to explain something to a customer, and if it's, let's say, from a decision tree model, which is not probably, which has multiple variable interactions going on within it, can you write model agnostic tools? That's the focus that we are doing, right? Irrespective of which algorithm you may use, can you write something that basis sensitivity analysis or so on, basis these inputs, this is the output you are getting, can I explain which inputs are driving this decision more? And it could be a neural network, it could be a decision tree, etc. So how do we go to model agnostic interpretability? Those tools will help the industry in general as such because it's going to be like interchangeable between different algorithms. So that's what we are thinking, such that we don't have to reinvent it for every new algorithm that may come in the future. And we can actually help explain our decisions to both regulators and customers very well as we keep innovating on AI.
Thanks a lot, Madan. And I completely resonate with that. In fact, for us also, one of the biggest challenges of bridging the new and the sort of old in banking is to sort of be able to answer that question when you predict it's 20% default propensity, cross-sell propensity, anything like that. Why is it 20%? Why is it not 25%? Because there's no set of rules that somebody goes through, right, in a conventional sense. And I think everybody has their own journeys in which they build out explainability models, but it becomes a very crucial part of the segment we operate in. And Amrita, coming to you, because now we both operate in fairly similar segments, doing B2C around the lending domain. So what's your sense? How do you tackle this entire paradox of explainability?
Sure. Hi, everyone. I think I kind of concur with some of the things that Madan said, right? That, see, we at Axio, we work with large partners like Amazon and Make My Trip and Policy Bazaar. And so explainability has a heightened sense of, you can't just say, these are the variables, because you also have to be mindful of the way that the partnership is structured, right? So about how you can make it intuitive, how you can, I tell my team sometimes you have to explain it in English, right? Not in math, right? And I think that as we get into more and more complicated models, more and more moving from like ML to AI in terms of the way that we develop our models, that is becoming a real challenge, right? What we try to do sometimes, is helpful, is you build a black box, and then you try and build a simplified version on top of the black box that you think has intuitive variables. If it gets to 90% or 80%, that's your explainability. Like that I think has worked well for partnerships for us.
Thanks for that. And so what we'll do is that we'll take a slight detour from this entire domain of credit, and we'll probably move a bit to insurance. Now, again, me personally, in my professional aspect, as well as a company, we deal with insurance as consumers of insurance. We do cross-sell of insurance to our customers, and there's always a pushback saying that, okay, you should underwrite more, approve, give more customers insurance and stuff like that. But would like to know what is happening under the hood over there. And Kaza, to your point, like how much, because we've all seen applications of insurance in credit underwriting and increasing credit penetration, but knowing how heavy guardrails of regulation that you operate within, what is your sense in terms of the application of AI in underwriting insurance in particular, from a sense? Do you see that there has been like AI applied in actuarial domain as well, and is there some delta that's coming from that side?
So, it's very interesting that insurance as a concept actually took its germination in the fact that, it is about utmost good faith. So, we've come a far cry from, this 300-year-old industry where we started it with the principle of utmost good faith. And today you're at a point where you're kind of, using machines to prove that you're not being frauded. Now think about it this way, the fraud industry, okay, and I was just, talking to Amrita and the gang at the back over there. The fraud industry, the insurance fraud industry in this country is 30,000 crores per annum. So you can imagine how many educated, data scientists and actuaries and technology professionals are actually running that industry, rather than the guys who are actually the manufacturers of insurance. Okay, so I can see, my co-panelists laughing, but this is reality. So if you really think about it, insurance companies today, at least in the life business, face 3 or 4 risks. First, they face the risk of identity. So to that extent, I think, there are people who actually, specialize in insuring dead people. So they're very spiritually inclined people. But I think to a large extent, a lot of that has got covered, especially, with the open API ecosystem in terms of the Aadhaar stack, in terms of, the CKYC, CERSAI stack, in terms of the fact that a lot of the banking, so the next risk after identity risk is, the financial viability risk. Is the guy really viable to buy this kind of cover? And believe you me, I think a lot of insurers wisened up during COVID, because at that point in time, you honestly didn't know who was dying. Okay, if you think about it, I mean, there was complete pandemonium in the entire, hospital and medical ecosystem, and a lot of fraudsters actually thrived in that period. So, I think the industry got a lot wiser in terms of the fact, and we had one very good safeguard in the reinsurers. So to that extent, the reinsurers are the insurers of the insurers. And I think they did a lot of good work with their advanced algorithms to, tell insurers that this is the point of time where you need to re-underwrite the claim. Okay, so I think a lot of insurers got saved thanks to the jurisprudence of the reinsurers. While we all complain about them, the fact of the matter is they did a lot of good yeoman service in terms of the data accessible to them and the algorithms accessible to them. The third very clear risk over here is the mortality risk. So, to that extent, I think one very important development that's happening in this country, unknown to many people, is the entire health ecosystem that the government of India is formulating under the ABHA banner, which is the Ayushman Bharat Health, account. So many of you, if you see your COVID vaccination certificates, you will have an ABHA number there. That is very important. And now the government has taken it one step further, because already a couple of states are piloting this whole thing. But very importantly, today customers can go on DigiLocker, which is the, the repository of the government, and actually register for Aadhaar. So you give consent to the government that anytime I do a report, I do a medical with a diagnostic center or I do a checkup in a hospital, those records can now be, uploaded in Aadhaar, which creates a very good medical profile for you. So it's much like the NHS or, Medicaid in the US. So to that extent, I think the industry has come very far in terms of identifying these three risks, mitigating them to that extent, and at the same time, one good thing, at least within the life insurance business, is that all insurers have been frauded at one point or the other, by multiple cartels. So it is very important that we talk to each other, and we do that. We have open forums which talk on, multiple case studies that are affecting us. We talk on, the diagnostics. So we have something called an MNTF, which is basically the Medical Network Task Force, which talks about diagnostic centers, which open and close at the drop of a hat and, do these fraudulent medicals in bulk and disappear. So there's a lot of industry collaboration. There's a lot of industry data sharing. And this is all collated at something called the Insurance Information Bureau, which is a subsidiary of the IRDA. So I think a lot of work is being done by the government as well in terms of helping the industry stay away from fraud by using, massive amounts of data.
Well, thanks, guys. I think that was very insightful. In fact, before more, I'll just add in two things. One, even from just speaking about fraud, because you touched upon that quite a bit, and I'll just come to that in a while. But personally, what we have seen from a credit perspective is that the lens in which people view fraud when it comes to digital underwriting has fundamentally changed, and more so in the last 5 to 10 years, right? Because earlier, fraud was a last leg parameter that people used to go through in a credit underwriting journey. Now, this is the first thing you check, right? And I was speaking to somebody pretty senior in the banking space who very rightly said that the lens has shifted to saying that कि देखो कौन चोर है, to saying that कि सब चोर हैं, and now figure out कि who's slightly better among them, right? And that's a fundamental shift. That's what we call a zero trust now, right? And so that's very relevant. And secondly, from an insurance side, when you said that all life insurers has been frauded from in all aspects, I think this also largely a result of very aggressive push for growth, right? Because and you'd be more than me, you'd be aware, but there's been a very prominent life insurer out there who started distributing life insurance packs with every 50 rupee prepaid SIM card that you'll actually buy, right? And you'll go and buy a 50 rupees SIM card and you'll get a life insurance cover for a certain amount, right? And the way the price is, they use a lot of large numbers and said that, okay, on an average, these many people die in India every year, so this is how much you need to price it. But what happened was people started dying more after purchasing that, because everybody on the deathbed was just sending their family members to go and buy their SIM card so they can protect their life insurance cover. And that's basically, so that just speaks volumes about how much more you need to be sort of careful when you sort of go about that. And I absolutely agree that your covers can go for a toss otherwise. But Srinidhi, coming to you, what is your sense in terms of how much has AI pushed the envelope when it comes to increasing insurance penetration in the country overall?
Absolutely. I think I know we are talking about a country where penetration is like 3.5% in terms of life insurance. And the regulator wanting to double it in the next few years, and then probably the entire India being insured by 2047, right? So in order to do this, I think the biggest tool at hand is going to be data and AI, and I'll tell you why, right? So as you were rightly talking about in the credit context, right? A large part of India is not credit worthy, right? And that's probably because it's not like they're not doing any credit transactions, but it's not being recorded anywhere, right? Similarly, there is a very large India that needs insurance, but not insurable from a traditional insurance perspective, because they don't have the kind of documents that insurance companies need. As you know, we ask for 1 million documents the moment you ask for insurance, and literally suck blood out of you to figure out how healthy you are, right? And most of the large part of India, which is self-employed and living in tier 2, tier 3 cities, and are probably doing agriculture or a kirana store or something like that, they don't have the kind of documents, right? Now, in order to penetrate this India, which we fondly call as Bharat, right? The way to look at them is completely different from how we have been looking at traditional insurance, right? So can we use the Jan Dhan Aadhaar system that that Kaisan and Yash were talking about, right? and harness the vast part of unstructured data that's there, because all of them have a phone today, all of them have an Aadhaar card, all of them probably have gone through vaccination and so on and so forth, right? And use that to create like a digital profile of the guy, even if he does not have the kind of documents that we need. But can we use the digital profile and use the account aggregator as well as the health repository to figure out his health profile and the income and other things working backwards from the bank account, right? And then build a profile to figure out how healthy the guy is, how is his lifestyle, what is income level, etc. And last but not the least, and probably the most important, is he coming to the journey with a fraudulent intent or not, right? And then offer insurance to him, right? That's the direction in which we are going. And we have just launched our new product, in Aegon, that is that actually goes by this paradigm, so that there is no health check, there is no finance check. The guy just gives a PAN number and a phone number, and we do all these checks in the background with an OTP consent, and then issue the policy on the spot, right? We are moving towards this paradigm, and AI is going to only play a more and more important role in taking this forward, so that a large part of Bharat can be insured.
Thanks for that, Srinidhi. And I think the other domain I'd like to move into right now is because all of us in our own ways have dealt with the pandemic, and that too successfully enough to actually be here and talking on the stage. Being an AI-led and AI-driven org, we have all also had our individual journeys of how we sort of dealt with applications of AI in that period, right? And the reason I say that is because, love him or hate him, but there's one quote of Elon Musk that I really like, which is the best way to do AI is to actually know when to not do it, right? That each of us in our orgs always have this big red button which you can press and be like, hey, look, things are going wrong. Let me figure out what is wrong, right? And Madan, coming back to you again, it'll be fairly interesting to know what has been the perspective of you at Amex as a large org in terms of how you sort of navigated your way around COVID with that. Because what we've seen is that, from a credit underwriting perspective, for example, seemingly good customers are the ones who sort of go under also at that point of time, right? So differentiating and also navigating your AI strategy at that point of time would be a good perspective to know.
Yeah, thank you, Sharad. So, interestingly, I took the role that I currently do in November of 2019. And so that was an international portfolio role. So I had come in with the dreams of doing a world tour, etc. And then after 2 months, the pandemic hit and all flights were grounded. And then since then, I've just been doing risk management of finding who's good and who's bad, etc. So yeah, I think you hit the nail on the head. Figuring out who's actually under stress versus who's not in this pandemic-related climate is become even more difficult. For example, as soon as all the first wave hit, the government announced moratoriums. So nobody was expected to pay. So are you genuinely under stress and you're not able to pay, versus you are just making use of the moratorium itself takes your models for a toss. So how do you now tune your models, which has been tuned on pre-pandemic data, to help address these sort of situations? Again, became a massive headache in credit risk models. And effectively, through 2020, 2021, do you really want to use still pre-pandemic database decisions? Or do you want to pivot to use post-pandemic or in-pandemic data? Because American Express, as you would know, is largely the customer base spends their cards on travel and entertainment. But there was no travel, no entertainment happening. So people were pivoting their card spends to goods and services, to more essential spends, groceries, things that probably are not immediately associated with an Amex card. But the models knew something about our customers differently. So how do you now treat or feed the models the right amount of, but we don't want to lose everything that we had learned over the last many years as well. So how do you find that right balance of pre-pandemic and post-pandemic data was again a big challenge. So those are all some key problems that we had to retune, and then we continue to do as now it's like pre-recession, post-recession. There is always a pre and post happening. So we are thinking that through. And then that's on credit risk, right? And then given fraud has been the flavor of this discussion, even in fraud, like I was just telling the panelists just a few minutes ago, we have been hit by a new wave of fraud on credit cards called romance scams. I don't know how many of you have seen the documentary Tinder Swindler on Netflix. It's just a person just goes and befriends, okay, mainly it's men befriending a lot of women on Netflix and then just getting into a romantic relationship with them and then posing as though that they are very rich, they'll be able to pay off big amounts and then asking the partner to apply for a credit card, Amex card. And then Amex looks as though it's a genuine card application because we are actually underwriting the actual person. We don't see anything distinct, but the spend is going to happen by the fraudster and then he ditches her and then she complains to Amex and then Amex takes the loss. So it's become a big racket of how do we do this. So again, a sidekick of how we had started automating all our applications. So we had gone blind to some parts of who the customer was, etc. And then how do we now retreat our fraud models to know, like, can we look at some neighborhood-based, lookup-based solutions? Like, does this customer look like somebody else who was defrauded? And can you deduce something from that? And then try to ensure that the good customer is not harmed. So both in credit risk and fraud risk, I think it has been a massive learning journey in the last 3 years, both from the pandemic and from the related things that the governments did, stimulus, pandemic relief programs, et cetera, et cetera. So I think, yeah, both as a data scientist and as a machine learning practitioner, we have had to sort of innovate, and then we continue to do that. And now, like, yeah, now we are in a post-recession world, hopefully. So we'll see what that comes up.
Thanks for that. And there was a good perspective from a credit side, and I'll just come to you, Srinidhi, for a perspective from the insurance aspect as well. But on your point, Madan, I think it's very relevant, and you have to rethink a lot of what you typically do in a normal scenario when you talk about a COVID-like era. And I remember like one of the discussions that we were having, because we primarily service the salaried class in India. And you have people who are out of jobs left, right, and center, having all kinds of salary cuts happening, right? So we're probably thinking at even a more meta level, like basis knowing what a customer's attributes are, how employable the customer is, right? So if you're giving credit for a year and a half, even if a customer is temporarily out of a job, if he's employable enough, your credit is pretty much safe, right? So. But that's the sort of thinking that we had to do back then, but don't have to do it in these normal times. But yeah, it's fairly interesting how everybody dealt through that. But yeah, Srinidhi, looking from your aspect, like what do you think from an insurer's perspective? How did you navigate a period like that?
Yeah, absolutely. So as Madan was telling, there is always a pre and a post, and then COVID was the most recent thing in our lives that had the pre and the post impact, right? And because we have been talking about underwriting a lot, let me take the other perspective, which is the customer experience, right? So what used to happen was that, let's take my father, for example, a career bureaucrat, right? And he was using his phone, pre-COVID, predominantly to make phone calls and look at his, SMS from State Bank of India, right? That's what he was primarily using for, right? But come COVID, he was sitting at home and, he had to depend on his phone for pretty much everything, right? So he started using Uber, he started using Swiggy, and then he started using the online banking apps and so on and so forth, right? Now, when he comes to, doing a BFSI transaction, it could be a bank or an insurance, company, for example. Now, he's comparing the customer experience that we provide with what Swiggy provides, Uber provides, and Amazon provides, right? Just because we are a bank or an insurance company, he does not discount, okay, I am okay with a very, high friction, tedious journey, just because it's a bank, right? So he expects the same customer experience across Uber and Amazon and Swiggy and insurance company or a bank, right? So but we are a regulated entity and we need to know who you are. Swiggy does not know who you are, right? Does not need to know who you are. And so how do we provide that kind of Amazon, Uber experience while being a bank or an insurance company, right? That was the biggest challenge we faced this side of COVID, because my father and all the people equivalent of him who had done only phone call using a phone in the past are now using phone for everything, right? And that was the problem statement, and then we had to work backwards to figure out, then if that is the experience, then how should underwriting happen in the background? So that as far as the customer is concerned, is zero friction, right? And then if that is the thing that has to happen, then what are the algorithms that need to run? How do we provide data? How do we augment or replace the documents that we need, with APIs and algorithms using Jandhan, Aadhaar, mobile, health stack, Aadhaar stack, whatever those things are, right? So that was the entire journey that we went through, and eventually came up with what we had today, which is, if not exactly Amazon and Uber kind of experience, but trending towards that, if you will, right? So that's the journey that we have all gone through. And that was not an easy journey because it was not just the customer experience team that had to work on it. It was underwriting, pricing, technology, analytics, everything. The entire company had to transform the way we think and we do business in order to make the transformation happen. Yeah, it's been a very different world pre and post.
No, thanks for that, and it's a great perspective. Now, Amrita, I'll come to you on something that I'd also love to know personally is on again the aspect of fraud. We spoke about it earlier when Kazad mentioned it, but when people talk about making loans as easy as ordering food on a food ordering app, you let your doors open to a lot of prospective risks that could happen. And that's why you've had an advent of an enormous amount of fraud and also fraud prevention detection solutions, and at least people talking about that. So I know it is taboo for a lot of people to even admit that there is a problem like that. But very happy to know your perspective. Like, what do you think is a way to combat it?
No, for sure. I think you were spot on when you said they want that experience, right? And I think especially when you're giving credit, and I think it's probably parallel on insurance, the moment you add friction, right, which you need to prevent fraud, you're adverse selecting and you're getting the worst customer from a credit point of view, right? So there are all these like second order impacts that you need to worry about as a lender, and I'm sure as a insurer, right? I think with fraud, a few things that we saw to your earlier question on the pandemic, right? I think across the board in FinTech in India, we saw a spike in digital fraud, right? To your point about how your father suddenly had time with his phone, I think there was a paradigm where there was a bunch of, people in India who had lost jobs, who weren't sure how to like make ends meet, that ended up turning to things like fraud. And there was concentration, with location, and they hit all apps at the same time, right? So, creating an informal industry body where we would talk about these MOs, I think was one great shift. I keep saying that we need to have like a bureau equivalent on credit for fraud. To your point, nobody talks about it. It's taboo. It's like, "Arey, hamare saath to nahi hota hai fraud," right? Which is not true. Everyone's getting hit by fraud. So I think that is still lacking. But there is a lot of industry conversations, like informal corridor conversations around different fraud MOs. How do we protect from these? And I think to the points that all the panelists made, there is the amount of data, the amount of solutions that exist to actually do things like fraud protection effectively without hampering customer experience too much is phenomenal, right? I do think for us at Axio, we have one additional flex because of the partners that we work with. For instance, when we work with an Amazon, there is a degree of pre-filtration of fraud that already happens before it comes to us, right? So there is that aspect, but obviously, like, fraudsters are super innovative in this country.
No, I completely second that. I think if I have an innovation team, I'd love to fill it with people who have possibly tried to commit fraud with us. There's the best guys you can have. Yeah, absolutely. And you mentioned this thing about this event where people at a specific geographic concentration attacked a lot of apps, and my first reaction was, let's go then and hire a bunch of folks. That's the best recruitment you can do. But
we've tried to like offer them jobs on the phone. It's not.
Oh, same here. Yeah. Doesn't work out very well. Yeah, unless you allow them to sort of attack other apps too. So. I completely agree. In fact, we at Cashier also have a stall over here. You'll see that we have a QR code there. We're giving credit to people within 30 seconds on that journey. And all you need to enter is a name and phone number for a customer. And we are underwriting customers on WhatsApp today, like an end-to-end journey, just on WhatsApp. You just need to put your name there and you get approved. And the first question you get is like, how do you combat fraud, right? The idea is that, well, do you want to put all these checks that you do and in front of a customer explicitly just to kind of make him aware that, all this is happening, so I can't defraud this app? Not really, right? You can have all of that happening in the background so that, obviously the inbound of suspected fraudulent applications will be crazy high, but then it's up to you to sort of put in all sorts of behavioral filters, rule-based filters, all your fraud scores that you put in there, also operating at scale so that your sieve remains as tight as possible, right? And And that becomes the ground reality there. And Kezat, since you mentioned about it when you were talking, and I'd love to hear your POV as well, that how as an insurer you have gone through this journey.
See, to be honest with you, the way I see it is that there is far too much focus of the industry in terms of trying to figure out whether the customer will fraud you or not. But the real, crux of insurance fraud starts with the point of, sourcing. So I think not many insurers today actually place due diligence on who they are hiring, what are their antecedents and precedents, who are the agents they are hiring. And say, please remember, insurance in this country, I mean, we can cry from the rooftops that, the customer is going to buy digital and the age of insurance intermediaries is over. I've been hearing this for the last 15 years. It's not happened and it's not going to happen because eventually Indians come with one very clear characteristic. We suffer from trust deficit. So if I'm going to, get into a deal with somebody for 5 years, 10 years, 15 years, 20 years, I need to catch somebody's throat. Okay, whether we like it or not. So whether it's an agent, whether it's my banker, whether, it's somebody who has an establishment where I can go and thump the table or, thump the guy if something goes wrong. Of course, if I'm not around, then the claimant should be able to do that. So I think the amount of due diligence on the right quality of people you're hiring, the quality of partners you're onboarding, and, their antecedents and precedents is so important to doing clean business. Okay, because eventually what we find, and this is interesting, that the word misselling was invented by the insurance industry. Okay, it didn't exist in people's vocabulary till 21 years ago. Okay, nobody ever said that an LIC agent missold me because he was always there. That was his profession. Today it's become, like a part-time thing. It's like your, romance scandal. That I'm here now and, I've disappeared. It's like the Bofors scandal, right? Why the Indian government bought Bofors, right? Because they had the ability to shoot and scoot. That's precisely what an insurance agent does today. Okay, so to that extent, I think that due diligence in terms of the sourcing partner and therefore, the kind, and see, always remember, a person who's selling at an individual level, if he comes from a particular sub-segment or class of people, he's never going to be able to sell to a class above him or a class below. He could sell to a class below him, but he will never be able to sell upwards. So, as long as you identify the socio-economic segments of where these people are selling from, I think that the chances of acquiring good quality profiles increases manifold. And I don't think insurers pay enough attention to their sourcing partners. They rather, focus on the customer profile, which is not really fair.
Thanks, Kezat. I think that's, again, very insightful. And I can see that we are over time, so I'll end it in the next 30 seconds. So now, just one quick thing. I think I'd like to ask all of you guys to answer that in 1 second each. So, as part of digital transformation strategy of all of our organizations in which you have embedded AI at the forefront of decisioning, would love to know where is the scale of impact being the highest? Like, there is because of the domains that we come from, there's an impact that implementing AI has on improving our losses, which could be because credit losses, which could be frauds that come in. There is definitely an impact on improving customer experience because you offer more curated niche experience to customers by knowing who exactly they are, and your customer satisfaction goes a multifold. There is then an impact on better customer acquisition as well, right? Because you lower your CAC, you figure out who you can service, you not service pretty fast, and you don't deploy a machinery and not servicing who you can't. So in that order, 1, 2, 3, where do you think credit losses, customer experience, and customer acquisition has AI had the most impact for you? For me, for us personally, it's in that order itself. I would say most on 1, then on 2, and then on 3. All 3 are pretty prominent. And love to know from you guys. So, Madan, why don't you go ahead?
I don't know. As in, I think it has to be a balance between customer experience and making money. But at the end of the day, in my mind, AI is just like what we learn in school. It's a function discovery, y equal to f of x. You can keep improving the f as much as you want, but as long as you have the right data, which is the x, and the right problems to solve for, which is y, that's when the f will really be valuable. Otherwise, you can do all sort of fancy things. Neither of these 3 will improve also. So I think we'll have to find the right balance to say, like, where do we want to solve, what do we want to solve with, how much crazy we want to go, and then, yeah, it will all fill in.
You still have to choose, though, an order.
So, yeah, I would probably choose customer experience should be the top priority for everyone. And if you do that effectively, you will minimize losses and make more money.
So I think for me, from a desirability point of view, I would love for customer acquisition to be the first, because at the end of the day, I think for all of us here, we all want more financial inclusion, right? So I'd love for AI to be at the forefront of us being able to serve more customers better, right? And then losses and then experience.
So we have spent a lot of time thinking about this as a company, and then what we have concluded and going after is that if we solve for customer experience, it sets that virtuous cycle due to which everything else will get sorted off, automatically. So customer experience is the bottom line that we focus on.
See, I'll simplify this further. I think keeping your promise is the top priority of any life insurer, because eventually we are there, at a critical juncture in a person's life, whether it is, a life goal that is being met, or maybe a legacy that he's building, or protection for his next of kin. So I mean, you can have it's very funny. I actually read that there was a bank in the US which went down very recently. They had an NPS of 80. They were acquired by a bank which has an NPS of 0. Okay, so how important is customer experience really if you're not meeting your promises? So I think the most important thing in this entire thing, and they say, technology is an enabler, data is an accelerator, and AI is the differentiator. So if you ask me if you can use data and machine learning, AI, all of this together to meet your promises, I think you've done your job as a professional.
I think, with that, we come to the end of this discussion. Thank you, everyone. I think there was a great chat, and it's always lovely to do discussions like these. Thank you so much.
Can we have a huge round of applause, everyone? Thank you so much, Mr. Yasharaj, for beautifully spearheading that conversation. And yes, it was definitely one of the most wonderful panel discussions of the day. Thank you so much. That being said, may I please invite Mr. Prikshit Gupta, Vice President, APAC, and Mia at Bureau.id to felicitate all our speakers on stage. Welcome, a warm welcome to you, sir. So request you to please take the center stage. Thank you. Thank you so much. I urge you all to please take the center stage for a group photograph.